Welcome back to the channel. Today, we are breaking down one of the most reliable price action reversal signals, the shooting star. This single candlestick appears at the top of an uptrend and often marks the beginning of a major shift in momentum. By the end of this video, you will know exactly how to identify it, confirm it and trade it with precision. What is a shooting star? A shooting star is a bearish reversal candle that forms after an uptrend. Its look is unmistakable, a small real body at the bottom, a long upper wick and almost no lower wick. The long wick tells us buyers pushed the price up, but sellers hit back even harder and forced the candle to close near its low. That shift from strength to weakness is what makes the shooting star so powerful. Market psychology behind the pattern. To trade it well, you must understand the psychology happening inside the candle. At first, buyers feel confident and drive the price sharply upward. But as price reaches a key level, sellers appear aggressively, overpowering the buyers and taking control. This sudden shift signals that the uptrend is losing strength. It shows hesitation, then rejection, and finally potential reversal. Best locations for a shooting star. This candlestick means little unless it appears in the right place. You want to see it at the top of an uptrend, near a major resistance zone, or inside a supply area. It also works extremely well at Fibonacci retracement levels, especially the 61.8% level. If a shooting star pops up in the middle of a sideways market, skip it. Location is everything. Why confirmation matters? A common mistake is jumping into a trade as soon as the shooting star appears. You must wait for confirmation. A strong confirmation is when the next candle breaks below the low of the shooting star. Other confirmations include rising volume, RSI turning down from overbought, or stochastic crossing downward. When the candle, indicators, and volume all agree, the reversal becomes far more reliable. How to enter the trade? Method 1. Break of the low. The simplest entry is waiting for price to break below the low of the shooting star. Once that level breaks, bearish momentum is confirmed. Method 2. Retest entry. Often, after the breakdown, price pulls back to retest the wick zone or the body. This retest gives you a better price and improves your risk-reward ratio. Method 3. Supply zone and shooting star. One of the strongest setups occurs when a shooting star forms inside a supply zone. This combination shows institutional sellers stepping in, and it usually triggers sharp reversals. Stop loss placement. Stop loss is always placed above the wick. That's the level where buyers last pushed price. If the wick is too long, you can also place your stop above the nearest resistance area for extra safety. Never use a tight stop on this pattern. Give the trade proper space. Profit targets. For targets, the first goal is the nearest support or swing low. The second target often aligns with Fibonacci retracement levels like 38.2 or 61.8%. You can also trail your stop loss to lock in profits if the downtrend becomes strong. This approach works well both for intraday and swing trading. Example scenario. Imagine price climbs quickly into a major resistance zone. A shooting star forms with a huge upper wick and rising volume, clear rejection. The next candle opens and drops below the low, confirming the reversal. RSI turns down, volume picks up, and the breakdown continues smoothly. Entry comes below the low, stop loss above the wick, and targets hit step by step. The stochastic in negative crossover position. Mistakes to avoid. Never enter before the pattern confirms. Avoid trading shooting stars in sideways or choppy markets. Don't rely on the candle alone, context is essential. And never assume the market must reverse just because a shooting star appears. It's a signal, not a guarantee. The shooting star is one of the strongest single candle reversal patterns when you use it the right way. Focus on location, wait for confirmation, manage your risk properly, and let the market do its job. Build these rules into your trading plan, and you will see how powerful this pattern can be. Subscribe for more candlestick trading strategy lessons. Learn to trade like institutions, not against them. If you gained value from this video, make sure to like, share, and subscribe for more professional trading concept lessons, and next video will be on the candle pattern. Comment below which candlestick pattern you want us to cover next. Thank you for watching. Trade smart and manage your risk.